All right, let's bring in Kevin Green, senior markets correspondent, right away to help set up the action today. All right, KG, I mean, futures are lower already. It looks like September is starting out how one would expect. So let's talk about the setup for September, especially when you think about how it performs on a historic basis.
Yeah, obviously September is actually a very tough month, not only when it comes to volatility in the markets, but also just equity gains just in general. And actually today is one of the tougher days for the month. The first trading day of September is usually actually bearish. So we are kind of seeing that trend here. And you are seeing a little bit more of a risk off tone, especially in the technology sector. Diane, we are seeing the NASDAQ 100 down about 1% in pre-market trading. It's actually erased the Chairman Powell's bump, if you will, on August 22nd when we had that commentary coming out from Jackson Hole. It's actually erased that right now. So we have to just kind of be mindful that September can be pretty volatile. There's a lot of economic data that we have this week, especially on the labor front, that the market's going to digest. You have the Fed meeting this month as well. Are we going to cut 25 basis points? Is it going to be more than that? Are we not going to get a cut at all? And then we also have something called these tax receipts, if you will, or tax payments on September 15th for corporations that have extended their deadline from April. So that could also be a situation where securities are being sold in order to raise capital in order to pay off those tax payments. So there's a lot that's kind of happening under the hood here. And we might see some gyration, but usually once we have these pullbacks, I believe the average pullback over the last 20 years is like 1.2%, 1.3% or so. It sets us up for maybe a little bit of a volatile start to October, and then we have that year-end rally. So a little bit of gyration, not really surprising right now, but a lot on the economic front as well as the news front that's really kind of hitting the headlines today.
Okay, KJ, I'm glad you brought up the tax component because I've seen similar commentary from Jay Woods of Freedom Capital Markets. He says there's a few factors. There's not necessarily one particular factor that leads to that September swoon that we often see. But look, August was better than expected, and that can perform similar to September. Are there any tailwinds potentially for September, or get ready to be rocked?
I mean, one of the tailwinds that you could see is like it's a bad news is good news for equity markets type of situation. So that could be actually the ADP report that we'll have on Wednesday or on Thursday. I'm sorry. And so if we actually have a worse than expected ADP print, that probably solidifies obviously a rate cut in September, but maybe that also raises the odds, which could also lead to equity gains, at least for the most part here. And then also if we do see inflationary data sets actually starting to decelerate a little bit more over the next couple of weeks or so, that could also be a tailwind. But once again, that gyration that we see, some of it's mechanical. We have an options expiration, the quarterly expiration that's going to be on the third Friday of September as well. We kind of see some gyrations there. And you're right, the tax payments themselves, you can see equities being sold off. Do we actually see more activity in the repo market, the overnight lending market? That's also something to be mindful of because that's been drawn down a lot. So there's a lot that's actually on the radar for this month. But once again, this could be, if you're a longer term investor, Diane, pullbacks could be a dollar cost averaging opportunity for those that are building a longer term portfolio. For the intraday traders, it might be a little bit more difficult to try to find trends over the over a 1 day period and or even trying to swing trade this market over the next couple of weeks.
Okay, and then let's talk a little bit about price action in the bond market. We're seeing yields move, a lot of gyrations, whether we're talking about in the bond market and fixed income or in some of the pressure in equities this morning because of the tariffs and that court ruling that we saw on Friday. The Trump administration obviously plans to fight back. Can you catch people up on where we stand here?
Yeah, you are seeing some gyration. Look, if you're kind of looking at the 10-year Treasury, we'll talk about that report. I mean, we hit down to around 4.21% on the 10-year. Diane, we haven't stayed below that level for more than 1 day in a very long time. So this is also maybe a little bit more technical in nature when you're looking at the 10-year. Okay. And then the 30-year is obviously getting close to that 5%. Yes, we had that news on Friday regarding the Trump tariff policy. And we have seen an appeals court basically rule that the tariffs, or these reciprocal tariffs, or some of these tariffs, the majority of them actually, are deemed illegal and that the president actually did overstep. Now, obviously, they are still into effect right now. This will probably get kicked up to the Supreme Court, and then we will see if the Supreme Court actually takes up the case. I think there's up until October, they have that opportunity to kind of announce that they're going to take it up. And even if they do, Diane, we probably will not even see the Supreme Court take action until the first or second quarter of next year. So the tariffs are still going to be intact. Is it going to cause a little bit of uncertainty? that might be the case here. We have seen the Supreme Court really side with this administration in the past. I think the market's probably pricing that in here for the most part. But it's not only just what's happening with tariff policy that's moving yields. On the global scale, you are seeing yields move aggressively higher. Japanese 30-year bonds, highest that we've ever seen when you're looking at the rates. UK bonds are getting blown out today as well. So it's not just a U.S. story, it's a fixed income story across the globe. Now, that might be because maybe we're factoring in economic growth and higher inflation. That could be some other factors when it comes to the fiscal side of the equation, when you're looking at a lot of these countries like ourselves or even like the UK right now, which is dealing with a little bit of a budget issue. And so the gyration or the volatility in the yield markets or fixed income markets could also translate into the equity markets. That's not something that's out of the norm here.
Okay, and then let me know what you're paying attention to as it relates to the levels in oil and gold, just because I want to get through all of these different price action, given that we're setting up a new month. Gold, I'm seeing hitting a new high this morning.
Yeah, so gold for right now is actually just completing a technical breakout above the 3,500 level. And so you are maybe seeing some buyers continuing to step in, as well as the shorts that were trying to kind of knock gold down. It's been consolidating pretty much since May, hitting that 3450-ish area, 3460, and that was an area of resistance. Now we're kind of seeing a little bit of a breakout and a follow through. Silver's doing the same thing. So for gold, you're kind of continuing to look at those round numbers. That 3600 level could be an area of resistance. Even looking at 3750 could also be in the cards, especially if we have this equity and treasury volatility that creeps into the market, as well as higher inflation. For crude oil, you are seeing that bounce back a little bit here, up around 2% in today's session so far. That's basically priced off the fact that the market is really believes that OPEC is not going to increase production quotas over this weekend, which we do have an OPEC meeting. And then also the Russia-Ukraine conflict continues to escalate. Russia's crude oil supplies, if you will, the refiners continue to get hit. I believe it's around 17% of their overall capacity is offline because of attacks from Ukraine. And we also had some pretty favorable China data overnight as well. So there's a lot that's taking place there. A lot of short interest on the WTI contract, and we could also be seeing a little bit of a short covering move here. You want to see it go above $65, though, if you're an oil bull right now, though, and maintain that level.
Okay, and before I get your S&P 500 levels that you're watching for today, KG, let's quickly talk about the IPO space. Seeing the news about the Klarna IPO, we knew that had been coming, that was expected to come earlier this year, but now we're seeing there's a securities filing today. Not a tailwind, obviously, for equities so far, but obviously they believe demand is there.
Yeah, highly anticipated here. This is the buy now, pay later space. They're looking at offering up to $1.27 billion. That's the target that they are trying to raise for this IPO, and pricing it between $35 and $37. Now, obviously, there's going to be a mixture of this offering when it comes to existing shareholders as well as new shares hitting the market here. But we are obviously looking forward to another IPO hitting the market. I mean, we have seen some pretty successful IPOs this year. We've seen some failures, and so this one's been highly anticipated. Let's see how much the demand is there for this company. And right now, there's analysts that believe that the stock's valued at around $5.5 billion. And so it's actually, the offering amount for the most part is a little bit underpriced compared to what some analysts' expectations are.
Okay, and then your levels on the S&P 500 today, in particular to the downside, but we can give a shot to the upside too.
Yeah, to the downside, 6,400 is your first area of major support. So for the most part, if you're looking at implied open, we are probably only about 12 points or so away from that level. To the upside, 6,470.
Okay, to the upside, 6,470, but I think the target that we'll really be watching out for today is the downside. All right, that's our Kevin Green, senior markets correspondent with the setup for September.